welcome to today's video. Today I will cover the monthly performance of the stock and crypto markets, the strategic Bitcoin reserve, Bitcoin proxies and unemployment data. So let's get started. Since the beginning of the February, the S&P has dropped nearly 8%. Tesla, one of the strongest performers, has fallen 30% over the same period. Meta is down 18%, Google has declined by 15%, and Nvidia has lost 20% from its February highs. Whether this marks the bottom or if negative sentiment is just beginning remains uncertain, but one thing is clear: the start of the year has been anything but smooth. The total crypto market cap has dropped 18% since the start of February. While this may seem surprising given the positive catalysts, it's important to remember that markets are always forward-looking, meaning those catalysts were already priced in and now we are seeing the cool down. Bitcoin has fallen 15% in that period, but if that sounds tough, Ethereum has plunged 34%, showing little real strength in this cycle. Solana has also lost momentum, tumbling 40% since February. This serves as a clear reminder that assets that rise sharply can also experience steep declines. Last week was historic, not because of Bitcoin price action, but due to the long-awaited approval of a strategic Bitcoin reserve, officially signed into law by current president. So far, this decision hasn't been reflected in Bitcoin's price movements, not just in the past week, but throughout February. With this move, the US has chosen to hold onto its Bitcoin rather than sell it, making it the largest sovereign Bitcoin holder. In my view, this isn't just significant because it's the US, it's a game changer because the rest of the world is now watching. It's only a matter of time before other countries start following suit. Now let's look at some Bitcoin proxies, which might be interesting choice of the future. Bitcoin miner Iron has released its latest monthly operational data. Their cost per mined Bitcoin is just under 29k, accounting for approximately 17% of hardware profits. They aim to reach 50 exahash per second within the next 4 months, while also generating impressive profits margins of 96% from their AI division. However, despite these high margins, the AI segment remains a small part of their overall business. Another noteworthy company, CleanSpark, has released its February update. With 624 Bitcoin mined, they remain one of the top producers in the industry. Their total Bitcoin holdings have grown to 11,177, now covering approximately 40% of their market capitalization. And that's just part of the story. When factoring in their efficient, ever-expanding fleet, the potential upside becomes ever more compelling. Marathon, the largest Bitcoin miner, produced 706 Bitcoin in February, securing the top spot in terms of production. With a cost per mined Bitcoin of around 29k, their success extends beyond just mining efficiency. Their Bitcoin holdings are even more impressive: 46,374 Bitcoin, covering a remarkable 75% of their market capitalization. Of course, nothing said in this video is financial advice. Their CEO was in the spotlight last week as one of the attendees at the White House Crypto Summit. During the event, 6 key proposals were put forward: establishing a strategic Bitcoin reserve, expanding domestic Bitcoin mining, ensuring secure and reliable blockchain access, implementing supportive regulatory policies, taking the lead in setting global Bitcoin standards, and strengthening US security by controlling a significant share of global hash rate. These initiatives highlight a growing focus on integrating Bitcoin into national strategy and economic policy. The unemployment rate rose to 4.1%, a modest 0.1 increase from the previous month. While the uptick isn't significant, markets, which had shown weakness throughout the week, ended on a positive note. This highlights the current state of the market, so pessimistic that a bad economic data is seen as a good news. The chances of a rate cut remain low at just 12%, while 88% of the expectations point to no change at the next FOMC meeting. It will be interesting to track these odds as new data emerges next week, particularly the latest inflation reports. That's all for today. I haven't been as active in the past couple of weeks due to other commitments, but I will continue to share market updates from time to time. Until next time, bye!